On the Q1 2020 earnings call here for Tesla, Elon Musk shared some huge news which could truly be a game changer for Tesla and Tesla stock. And this, combined with some positive results from the earnings report, has resulted in Tesla stock soaring nearly 9% after hours, on top of the 4% climb during the regular day. So this is going to be a very exciting video because I'm going to share with you exactly what I learned from listening to the earnings call for Tesla. We're going to go over their numbers that they just reported, and we're going to go over some huge news that Elon Musk hinted at, which is possibly coming later this year. Subscription, which could be a huge profit driver for this company, is an exciting thing to talk about, and Elon Musk did touch upon that in this conference call. So guys, stick around for this video. It's going to be a fun one. If you enjoy Tesla videos, drop a like down below. What I do want to try for this video is to hit 1,000 likes, because we've never done that for a stock specific video, and I'd love for Tesla to be that first stock that gets a 1,000 like video. So starting off, let's go over the highlights from this earnings report. They start off with their cash balance here to rule out any fears of bankruptcy, and the company currently sits at a comfortable $8.1 billion in cash right now. This is more than enough for Tesla to not only sustain themselves, but to keep spending on R&D as well, or as Elon Musk says, to keep putting the pedal to the metal here and continue innovating and investing even during times like this. The next thing was free cash flow, which came in at negative $895 million in the quarter, but we'll address this in more detail when we look at the updated balance sheet shortly. Now, in terms of profitability, Tesla did surprise investors and analysts with a profitable quarter here in Q1, while most analysts were expecting some losses once again. They state that gross margins for Model 3 at their Gigafactory Shanghai is reaching margins of the US-made Model 3, which is again extremely bullish news, because if you didn't know already, Tesla is actually one of the most profitable, if not the most profitable, auto manufacturer at scale in the world. And then they talk about the Model Y here. The gross margin was positive in Q1, and again, this is bullish because we all know how important Model Y is for the company moving forward. For them to really achieve positive gross margins so early on in the production cycle, it's hinting that high profits for this product is very likely in a few years. Next, they touch on a few pieces of operation news for investors to chew on. Model Y deliveries have begun, and many already know this, as a lot of them are being spotted now in the wild already. Model S range increased to 391 miles with no increase in battery capacity. And actually, during the conference call, Elon said that the tester for this car that tested this range actually left the door open and the keys in the car overnight, which resulted in the car staying in driver ready mode overnight. So when they did the test the next morning, it had already drained about a couple of percent of the battery. Now, Musk assured investors on the call that Model S can comfortably hit 400 miles when it is at full capacity. This is absolutely ridiculous because even most gas-powered traditional cars out there cannot compete with Tesla when it comes to range, let alone other electric vehicles, because one thing that they all lack is range. Okay, now let's look at the balance sheet today, and I want you to pay attention closely to the three columns with the arrows above it. Q1 is seasonally weak for all auto manufacturers, doesn't matter who you're looking at. So to compare Q1 to Q4 of the year before is just stupidity. And a lot of analysts got burnt on this by doing this last year when they compared Q1 2019 to Q4 2018. So the fair and logical comparison would be to compare the company year over year. So Q1 2020 would be compared to Q1 2019, and on the far right hand side you can see what that year over year comparison looks like and whether it actually grew or shrunk with the respective segment. So the first section here at the top is in reference to the automotive revenue specifically, and on the first line, this revenue grew by 38% year over year. But they also did have a good amount of government credits come in, so that's something to make note of, because eventually that probably will stop. But regardless, for now, revenues are still up. Gross profit was up 75%, which is again another very big jump year over year. And now gross margin sits at 25.5%, which is actually the highest margin that they've achieved in any of the quarters last year. Now under this, they have total revenues and gross profits, which accounts for all aspects of the business. And this was up 32% and 118% respectively, which are again very impressive numbers. Next is their net income. GAAP net income was $16 million and non-GAAP net income was $227 million. Both were positive versus the negative net incomes in Q1 2019. And then finally at the bottom, we have free cash flow, like we said, at negative $895 million for the quarter. But this is again slightly better than last year. So even if they continue at this burn rate, they're fine because their cash balance right now sits at $8.1 billion, which is again 4 times higher than Q1 2019. So in my opinion, it's safe to say overall this balance sheet shows that financial position of Tesla for Q1 2020 is looking strong, especially when compared to Q1 2019. Now again, here with the breakdown of the individual cars and products, we're going to compare Q1 year over year. Model S and Model X productions was up 9% year over year. But guys, we all know that the real focus is not Model S and X. The real star of the show, the main growth driver for the company, is Model 3, and this was up 33% year over year. And in my opinion, this is only going to get better going forward as more gigafactories are opened around the world, supporting more productions. Next is deliveries, and total deliveries were up 40% year over year, and the days in inventory decreased as well, which are both positive signs. Then they briefly touch upon their solar business, which had some struggles because at the back half of the quarter, the global issue hit, and this affected this part of the business because Tesla has to physically go in person to people's houses to install things like solar roofs and such, and I believe it was deemed as non-essential right now. So as a result, their solar deployment actually dropped by 26% year over year. And then finally at the bottom, I want to address the supercharger stations because this is very important to note. The number of stations increased 29% year over year, and the number of connectors increased by 33% year over year. So it's never been more convenient as a Tesla owner to charge your car when you're traveling. And in my opinion, Tesla needs to keep expanding on this because as more consumers buy their cars, the last thing they want is for people to complain about waiting to have to charge their cars, because this could be a serious hindrance in the adoption of electric cars in general. The good news, however, is that Tesla is ahead of the curve here and is in a strong position to keep expanding on this ahead of the rate of adoption by consumers. Other manufacturers are going to have a very tough time in this and have serious troubles because this is an issue they will also need to address eventually if and when they make a proper electric car to compete with Tesla. Now, I do believe that supercharging stations are getting to be a problem in major cities because there are already too many people that need to charge their cars and not enough supercharging stations. So I hope that Tesla focuses on expanding it within cities and not just in kind of rural areas off highways and such. And really guys, there are 3 things in my opinion that make Tesla unique compared to any other company. The first is that they're not just a car company like Ford or GM. The second is that they're not just another tech company either because they're actually innovating and pushing things where other companies have never been before. And the third, which is what I absolutely love, is that Tesla controls pretty much end-to-end production of their cars. They make things from the battery that runs the car, to the software that's in the car, to the physical car itself. So Tesla has full control over their design. Things like autopilot and full self-driving make Tesla unique, and Elon did mention on the call that he expects by the end of this year, this software will be so smart that it'll be able to take you from point A to point B without any human intervention. Now guys, this is obviously going to be the future of driving as it really frees us our time and we can travel from point A to point B while doing other things, and the car just gets us there safer than if we were driving ourselves. I think this reality is actually closer than we think. And of course, being an electric car, the other part here that's unique to Tesla is the battery. And they have the best, most efficient, and cheapest cost batteries to produce in the world, and no one comes close. If and when competition decides to take electric seriously, this will be yet another hurdle for them to overcome, and sooner or later, Tesla bears will come to accept this. Now, one thing unique that Tesla does that I'm not sure if any other public company does is on their earnings call, they actually answer some retail investor questions. So there's a method to actually go and submit your questions, and it could possibly get answered on an earnings call. And one of the questions that came out of this earnings call is actually what sparked this video and was around subscription. So the question really was around full self-driving and the experience of it, which then went on to really ask, would Tesla consider offering full self-driving as a premium subscription? The answer actually took me by surprise because Musk essentially said yes, this is most likely something that they will offer probably by the end of this year. Now, if you didn't already know, every Tesla actually comes with a full self-driving chip, and it's pretty much a software upgrade that unlocks it. So what Tesla will do is actually offer this. Of course, if you purchase a brand new car online and order it, you can add that on to that order. Or if you already purchased a car, you can actually go into the Tesla app and make an in-app purchase to unlock this feature. Regardless, many people opt out of full self-driving for now because it's expensive and they don't really understand it. So, by offering a subscription service, Tesla is giving customers the ability to almost try before you buy. And in my opinion, this will easily convince more people to either continue subscribing to full self-driving or eventually pay for the full upgrade. So a use case that I can kind of think of here is, say you're a Tesla owner, you don't have full self-driving purchase, and you're planning to go on a road trip sometime soon. So you know what, you go on, you subscribe for maybe a month of full self-driving just to try it out on this road trip to see how it works. Now, after you come back from this trip, you realize how powerful this is, how well it works, and you're just kind of hooked on this idea of full self-driving. So at that point, you either continue subscribing to the service, or you may actually do the math and see that it makes more sense to just purchase it outright. And then you go in the app and make a full purchase. This is exactly what Tesla is hoping for, and I think a lot of their customers are going to go down this route. Many people were hesitant initially to purchase full self-driving because it was a pretty big price to pay for something that is coming in the future. So their customers chose to opt out of it for the most part. But now Tesla is giving them an option to really subscribe and kind of trial it before they can make a full purchase. And I think it's going to be very successful. Subscription services and software as a service are very sticky types of businesses. And I believe once consumers try it, they're actually going to be hooked on this. There's a reason why these software companies, subscription companies make so much money, and it's because once they acquire a customer, it's a high likelihood that the customer keeps paying and keeps sticking with them. This is why you see services like Netflix so sticky, Spotify so sticky, and all these other subscription monthly services, because people sign up for it, they see the monthly cost, and they're just like, you know what, I use the service, it makes sense, I enjoy it, so I'm just going to keep paying a monthly cost to use this. And who knows, this may open the door for other kind of in-app purchases for Tesla. Maybe they charge you $9.99 to unlock another new feature that they've pushed out to their cars, and this will just be yet another profit and revenue driver for the company if they choose to go down that route. Software is powerful, software is profitable, so I don't really blame Tesla if they do choose to take advantage of this and really open up this floor to their existing customer base. Now, to close off the earnings, Tesla gave us some outlook for fiscal year 2020. They touched on a few points here. First off, they state because the global issue is still going on, there's no way to properly guide for the near term. That being said, they still expect to deliver over 500,000 vehicles this year, and in my opinion, this should be pretty easy to hit now that Giga Shanghai is up and running as well. They also state that Model Y is of priority here, and they're focused on getting that ready for production in Giga Shanghai and Giga Berlin eventually. And guys, on the topic of these Gigafactories, Musk also briefly mentioned that they will most likely be announcing another Gigafactory in the next 1 to 3 months that will be built here in the US. So that's going to be another huge project here for Tesla in the near term. Finally, they also state that the Tesla Semi, the futuristic truck that they showed off a couple years ago, is going to be pushed back to 2021 now. Honestly, this is not too big of a deal for me because as an investor, I would rather them focus on Model 3 and Model Y over the Tesla Semi, at least for now, because Model Y is what consumers are waiting for, and it will, in my opinion, propel the company to new heights, so I can't wait to see the numbers that play out here over time when it comes to selling this product. So that's it, guys. Another surprising earnings here from Tesla. Elon Musk never fails to amaze us, and he always throws in a few bits and information here of things that we weren't even expecting to hear about. This is why I'm still a Tesla shareholder. I'm still extremely bullish on the company. No plans to sell my shares, and maybe at some point I will actually pick up some more shares. But I'd love to hear what you guys are doing with your Tesla shares. Are you planning to sell after this earnings report? Is anything fundamentally changed with your thesis after this earnings that makes you more bullish or bearish on the company? Let me know in the comment section down below, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.